So
we're going live. We're live. We just went live right now, so I wanted to make sure you got your mug okay.
I got it.
Good.
It's full of margarita at lunchtime. Day drinking.
I love it. I love it. Mine's full of watermelon flavored LaCroix.
I'm actually just flat water, but I was trying to show off.
Yeah, I got to get more to flat water again. I've been drinking a lot of that carbonated stuff, and it's kind of a waste of money, I think, at this point. But it's good. I'm kind of hooked on it.
Goes right to your hips too.
It does. It does. Well, cool. Wait for a few people to get in here, and we'll kick it off. You know, we're on episode 10. We're into double digits now, Matt.
Good. You know, I was just watching before we get going. I was just thinking. I've done my. I don't know if you can show this or not to the people about how to watch what's the show active markets. If they can just do that, I look at that thing every day, and I load the show active markets.
Yeah.
Into my Atlanta location. I compare prices. I look to see the volume of the stuff that's listed and the prices of some certain things, and you can see it's a great way to watch the market. And I just thought I'd mention that to your listeners today, because at some point that information is not going to be free, because it's very valuable, and it's something that you guys will be.
Yeah, so we're trying to come up with I'm trying to come up with a screen. We're live right now, just I'm trying to come up with a screen so you and I will be able to watch the live market while we're talking about this.
Yeah.
Because it's crazy. Everybody wants to get on now and look at our live market, but honestly, since it's free right now, we kind of want people to transact, right?
Yeah, that's what I was thinking. You can fill a room up with a lot of people just looking, but the information that you can glean from that is just phenomenal. Like, here's an example. I just started watching the first day I looked at it was June the 2nd, and I saw 2 number 2 SPF truckload to Atlanta was $1,737.
Yeah.
The next day it was $1,747, so that was kind of up a little bit trend. The next week it was $1,697. Same week it was $1,647. The next week was $1,354, and today it traded at $1,205.
Yeah, what's crazy? I watch the OSB and OSB North, and I watch the people. Some people in the Midwest want to buy OSB North. Some people just want to buy OSB board, but some people must have North, so they'll pay a premium for it. And I can watch that premium go out and come in on the exchange, right?
Yeah.
And then I can see where all the different point spots in the ground all over the U.S. where OSB is being bid and asked, right? I mean, and anybody on our platform can see that. It's crazy. It's information that nobody would have ever gotten from anybody they currently talk to in real time like this ever. It's like it's a game changer, right?
You actually can't do it in real time. Other
No.
than this is the only way to do it. Not that I'm trying to cheerlead you guys or anything, but it's literally you can't cover as much ground.
It's a digital market, right? I mean, we used to all call stockbrokers 20 years ago, 30 years ago, and wait for stuff to come back and look in the Wall Street. People still do that in the lumber industry right now. They're still calling their stockbroker, right? Which is fine. Now you can go on E-Trade and Robinhood, which is basically materials exchange, right? And look at.
Let me give you something, an example of something that's going to date me. Before there was fax machines, we used to Telex. I worked for an import company. We used to Telex. You guys don't know what Telex is. It's a cable that runs under the ocean, and you literally send a cablegram from where we were in Tampa, Florida, to Singapore or Taiwan or somewhere like that, and it would literally take 3 days to get an inquiry, just to get an inquiry delivered. Take 3 days to get the inquiry back, and you go, no, I meant to say 7/16, not 18 or whatever the number might be. It'd take you a week to get just to get a quote out, and then once you got the order, take you another week to make the transaction to get it done. So the only way to really trade lumber and do imports in those days was you just had to take on a whim. You just had to buy a boat, buy some containers, and hope when it got there that you find somebody to sell it to.
Yeah, no doubt. I mean, my first boss, Ted Block, he used to drive up to Canada, buy lumber while he was there. The cars would roll when he was driving back to Chicago, and then he'd sell them on a payphone on the way back, or sell them when he got. He just hoped he'd make it back to Chicago in time before the cars showed up, so he could push them. Yeah,
I I bet you when that big bag Motorola phone came out, he was one of the first ones to get one.
Oh yeah, man. I remember the back of the car. My buddy had an old rotary phone. He had a Lincoln Continental with two antennas on the back. I remember his mom's like, "Don't make a call in there. It's like $25 each time you call somebody." But all right, well, we'll kick it off. Welcome to Materials Exchange, Lunch with Lumberman with Matt Lehman from Lehman's Lumber Guide, and myself, Ashley Buckholt, CRO of Materials Exchange. We are the only digital, if you heard Matt and I talking about digital marketplace for lumber and panels. If you want to get away from the good old boy call around network or trade them side by side, you can come to us just like you do buying and selling your stocks and see what the real bid and ask is on the spot market out there. Real easy to get to us, either materialsexchange.com or mxlumber.com. And you can get a hold of Matt.
I want to put another plug in for something else that's different that Materials Exchange offers that nobody else does. I have a couple of customers that are right now that are multifamily builders, and they're just trying to crack into some mill direct kind of shipments because of the volumes that they buy. They buy like this one company's getting ready to buy 25 cars of 2x6 and 2x4, 104 and 5/8 and 2x4 random, 2x6 random. So it's a big deal that if they can cut out two people in the middle, it's going to save them, makes a difference in being able to do a project or not. But their biggest concern was the people they were going to buy from couldn't set up their credit fast enough. And I said, easy solution, list it on the exchange and have your supplier sell it to you on the exchange, because you don't have to worry about the credit. It's all taken care of because you're just saying you have the money in the bank and you're willing to pay for it before it ships or when it ships. And it alleviates all kinds of credit problems that are just surfacing all over the market.
Yeah, and just so everybody knows, Materials Exchange, we don't add a bro, as they say in the industry, in the financial industry, a brokerage fee or anything. We just have a flat fee to buy and a flat fee to sell. So here's what I say. If you're a buyer or a seller, if I was sitting on a big trading floor now, if I could do now with Materials Exchange, you can be your own boss. You can basically have the whole world to sell to, and you don't have to ask your sales manager if you can sell somebody if you're on Materials Exchange, right?
Yeah, really just sit together and wait for it to go up.
So right now, the way it works in a lot of places, if you don't have a relationship with Bob or Jimmy or Jane at all these locations, and the guy that doesn't work real hard next to you has that relationship, you're not allowed to call them and sell them. But on Materials Exchange, everybody can be on bidding and offering, and you can, in theory, be selling to everybody who's potentially buying. So if you can sell something at a higher price because the guy next to you is slacking and doesn't want to pick up the phone and do it, guess what? You can have access to everybody. So what it does is, if you ever want to see how people act, look how they're compensated, right? So if somebody on this trading floor has this hierarchy, the way they go up, and you can only sell this person or buy from this person if you've been here long enough or whatever, this takes that all out. It takes that whole gray area out. You can buy and sell whoever you want, the best bidder offer.
Takes the intimidation factor completely away, because you could have a customer that you made angry 5 years ago that said he'd never buy from you again, and might have been your best customer, and you had a falling out or something. You can pick that guy back up and sell him. He'd never know who he was.
Digital markets level the playing field for everybody. If I was young starting out in this industry right now, I would tell my boss, I'm going to get a Materials Exchange and sell or buy on here. And if they say no, I would ask why. And if they say because this isn't the way it's done, I'd be a little worried about the long-term potential at that company, because they're definitely not thinking long-term technically.
I was telling somebody on a call yesterday, said there's no such thing as my customer anymore. That's my customer. You can't sell it. That's my supplier. You can't buy it.
I ran into that at companies I've been at before. You got to let Billy or something or Jimmy or Jane sell that person, because they own that relationship. Like,
Not anymore.
We're not in that world anymore. Okay, cool. Well, welcome to Materials Exchange. Like I said, episode 10, Matt and I are doing lunch with lumbermen. Anybody that's on, please mention on the stream where you're from. And we're going to jump in. I want to talk a little bit yesterday with Matt Beamer and Greg Riley. We talked about new residential construction a little bit, the numbers that came out yesterday. And, we talked them up pretty good. But as I dug through more of the numbers this morning, they sure revised April down quite a bit yesterday. And
I do a 2-month rather looking at the previous month, I look at 2 months back and see what's the change, because that variable, it can be plus or minus 16%. So that means that those numbers could change in a 30% margin of error range. And that's you're talking about in housing starts. That's 500,000.
Right.
They could be off.
Right.
They're just claiming they can be off that much.
Yeah, no doubt. And so in permits and starts, we're still good, but after those revisions and permits came in okay, 3 point something. Does this look right? But they were still lower than expectations, right? And I think that falls back to what we've been saying about the ability to actually build what people are saying versus what labor, land, commodities, logistics are going to actually let us build, right, Matt?
Yeah, that's you can only put so much through the tube, and it's just after a while it's just going to start spilling over.
So,
and that's exactly what's happening.
Just real quick, I wanted to get to our trivia question. So I know Matt's got a mug. We got our new mugs. You can win your Arctic mug. Enjoy your best cold or hot beverage for as long as you want. I think they're guaranteed to stay warm or cold for 6 weeks when you put them in here.
The question should be this: how does it know?
How does it know? So here's the question: what famous announcer worked for the White Sox and the Cubs? What famous announcer worked for the White Sox and the Cubs?
Struck him out.
Let's so yeah, exactly.
Here's the clue. Holy cow!
He had the big black glasses. So a lot has changed on the lumber side since you and I talked last Wednesday. Had a conversation with a guy this morning. He thought when he bid and bought a bunch of 9-foot cars, Sean Higgins got Harry Carey.
Bingo.
So Sean Higgins, not only are we going to get you on the platform and start trading digitally, but you're going to have an MX mug sitting on your desk that you can look at every day and remind you of a digital market. Love Sean. Sean's a great guy. Good job, Sean. So a couple of guys this week that said they bought 9-footers 2 or 3 days ago, trying to get in front of the bounce, are now saying, shoot, I'm $300 off sides of what I bought. I mean, look at volatility coming from 1,700 to 2,000, whether you're looking at where it actually printed versus where the high trade was. Hell, 9-foot studs, high price trade, not the index, high price trade was about 2,000. That's $12 a stick. And I don't care what species it is. It was Doug fir, hem fir, spruce.
All right.
2 days ago, guys were trading cars sub 1,000. Still sounds big, right? But that's off. That's $6 a stick. So think about this. Any multifamily buyers out there that talk to people, it traded at $12, 9-footers. 3 weeks ago, 4 weeks ago, is now trading at $6. Hopefully you're getting that and seeing that. Matt, go ahead.
Before you warn these, I want to just put the builders and particularly multifamily guys and big builders kind of on notice that lumber that got priced at sub $1,000 is not on your supplier's yard yet. It's still correct. It still has to ship, still has to get there. And when it gets there, it's only going to be about 10% or maybe less of their total inventory. So don't expect to look for and see that your lumber, your price of your 2x4 is going to go from $12 to $6 overnight. In fact, it won't go all the way down to $6. It's going to be an average of whatever that 12 and 6 was at some point. So I think realistically over the next 30 days, if you can see a 30% change in your framing index price, that would be remarkable. But don't look for things to be happening right away.
Well, that's the thing. I mean, look at people are buying below the high trade price, and especially buying below index, because I don't know how an index is going to catch what just happened, right? So let's talk a little bit about market. Let's bring up your forecasting and decision points on your composite while we chat about this. The other interesting thing we talked about, Matt, historically over the X amount of years I've been in business, the range on lumber on a 2x4 basis was about $135 on the whole year. We traded almost $700 off on some items in a week and a half, 2 weeks. Nobody can predict that, or you can predict it's hard to. That's why you need to have a game plan, look at stuff, be equipped with a bunch of knowledge, go outside your traditional relationships and your guy or your gal that you talk to and get more information. So let's talk a little bit about your FDP. What are we looking at here, Matt? And what I think you were actually showing a little bit of a slowdown seasonally coming up here when we talked the last few weeks. Does that make sense?
Yeah, typically the market sells off or slows. It is slowing, and it does slow from probably May through August. But the big reason is that the builders are just shifting from starting to completing homes over the summer. And so the biggest surge in prices is the preparatory stage of the buyers trying to get ready for what the builders are going to do in April and May in their big start periods. So the market typically is strong up until March, and then it gets a little iffy and choppy or whatever after that. We're depending on how much inventory accumulation is going on. But historically, builder demand is less through the summer months than it is prior to April and May. So June and July are going to be less than April and May. So you're going to see just a smaller demand for lumber, and that doesn't mean that business is bad. It doesn't mean they don't have the order file still, or they don't have the ability to sell. It just means that they're at a different phase of their use for lumber, and we're in that phase right now. And you can see it for whatever the reasons are. Lumber's falling. It's falling at a time when it should be falling, and the thing that's going to probably be a shocker to this market is the guy asked me one day. He said, okay, so you're 86% correct on your FTP forecasting. He said, it'd be great if you could let us know when you can miss on when the 14% miss is going to be. And I think the next miss is going to be that August is going to be an up month rather than a down month, particularly in SPF and hem fir and whitewood species other than southern pine. But we can see a split market where southern pine goes lower through the summer. Because I just wrote down on a piece of paper a little while ago after we talked, I said like southern yellow pine minus treaters equals oversupply, and that's exactly what's got hold of the southern pine market now. Is there's just too much treated lumber in the hands of the real retailers, especially the big home supplies, big boxes. They just got. I went and counted the other day at a local one of the big two places here, and they had 332 bundles of pressure treated lumber. That's almost like 35 truckloads, and they normally have 2 or 3. They're just way oversupplied. And so, let's kind of tick through some different markets. And you and I kind of talked a little bit about the southern pine market, because that's what we traded a lot of volume last week on. Almost 100 trucks of those. And I was amazed at the discount. So again, you have cash prices, what the high cash price, and then you have index. Matt, what I saw some of the southern yellow pine market actually trade at, and what I heard some of it trade at, was insane relative to index. So my question is, how much, and some of the actions of the mills trying to get order files and trade at discounts to print out 6 weeks lets you know that other people probably saw that coming, right? So where did you hear I saw a southern pine 6-inch 2 and better, guys who were buying 2 and better because they needed number 3 because it was cheaper. It held, and then it traded off. How much of a discount did you see like some of these pine numbers trade at relative to the same index? I saw 2 by 6s. I've heard 2 by 6s is $300 under index for the last 2 or 3 weeks. But now it's even got to the point that jobbers and framers are getting calls from producers saying, "Make me an offer," and they don't even know where to start. They know that $300 isn't going to get it, or they're afraid that they're not going to. They're hoping they're going to get an offer better than that. But $200-300 is just. It's easy to get just for and not even in big volume, just 2, 3, 4, 5 trucks. It doesn't take a lot of volume to get those kind of numbers.
Yeah, and I think a lot of that has been done. So I think you're getting to the point now where everybody thinks it's going to happen forever. I mean, eventually we'll have some kind of a bounce, but how does an index catch that? Will they catch that $300 off on Friday?
No.
So
No, because
when they,
it's because of the source of the information. Most of that source of the information is going to be from wholesalers, because it's, if you think about the publications that have 2,000 SKUs that they've got to get prices on, and half a dozen people collecting the prices, it's impossible to call all mills or get all mill prices. You got to get some broker prices, so you can call around to one place and
sure, I used to do it. I used to report to it when I was at a broker.
I did too. I used to report
Yeah.
Southern Pine to it,
Yeah.
but it's just it's impossible to catch that, and you don't want to put the low end of a price range, like the low end of the here's like, that's not necessarily the market. $300 off isn't the market. It's what that trade was. But there were other trades that were done maybe $100 off or $50 off, depending on who the customer was or how aggressive they were. But what we tend to hear about in a rising and falling market are the extreme ups and the extreme downs, and try to make the market be that. But it's really not. It's more of an average kind of thing.
So listen, this is your SYP FDP. What are we looking at here, Matt? That looks like it has a little less seasonality laid out in there, and a little bit more extensive trading off. What that was on the 20th. It kind of peaked, is what it shows, and like trading off.
That was week number 20. Week number 20, and this is week number 25 right now. I think that's a week behind, but maybe those 25. But the next thing coming up in the particularly Southern Pine market is summer shutdowns and vacations, and people typically prepare for that summer shutdown. Summer shutdowns are typically the 4th of July week, and vacations, the biggest week for vacations is in the 4th of July week, and the biggest month for vacations is July. So buyers tend to prepare ahead, and we get a little what I call the summer bounce around the last week of June, where people are preparing to be out of the market, out of the office, and out of the market for the next few weeks. So they buy ahead, and that gives us a little bounce in July. And based on what I'm seeing from the FTP there, and I'm going to show a scale that's different this week. It'll spread it out some, but it looks to me like that summer bounce is going to, could initiate a longer, more sustained buy. But the one thing that concerns me about this whole market is just the amount of Southern Yellow Pine pressure treated lumber that's already in the market, and the treaters are out, and they have no reason to get back in until their customers liquidate that inventory. And it's, to me, actually looks like I've seen inventories that look like they're good for the rest of the year.
Yeah,
based on what they've had in the past.
Well, let's without giving any names or anything out too, let's now talk a little bit about SPF. I like talking about it because the contract likes look at that. Look at. We'll never really know what the actual low trade is in SPF, because that is such a quote unquote, we did it secretly with some of our people, right? I mean, I've heard that it's traded in the sub under 1,000, right? People had drawn a line in the sand, and then they kept moving that line, and all of a sudden took some stuff, and we're holding now. We're not going to do anything, but yet that's in the West, right? And then you go to the East, and like I said last week, it started out with people calling their guy or their gal saying, hey, we're still doing really well, but we got an extra car here to sell. And now all of a sudden, like, look, it could change today, and we could be up in futures today and up in cash. But this morning when I walked in, a lot of people are like, gosh, I wish I wouldn't have bought that 2 days ago, right? But they're the same people too that bought and made the next day $100 or $200, $1,000 in cars they were buying on the way up. That's volatility. That's the opposite side of the hill coming down, and it puts everybody in a position they're not sure what to do. So that was on spruce, right? Spruce trades a little bit different, because remember, spruce is so much different from Southern Pine because of this. Southern Pine, if you look at Southern Pine mills, they're about 40 acres when you look at them from a satellite. A big spruce mill in the West is about 200 acres, because they have to build an order file or build log decks in the winter. In the East, they're a little bit different, but they also ship a lot of their stuff on rail over 1,000 miles. Southern Pine mills have gatewood. They're buying more wood on a regular basis. They don't need as much, and they come in and they ship within a 200-mile radius of their mills for the most part. The spruce trades a little differently. It gets bought by people that take bigger blocks, shipping it to different areas. But to Matt's point, he thinks, that's something where you see that maybe volume could get bought quicker, and that could get a bounce and maybe create a separation between Southern Pine and spruce, right, Matt?
Yeah, and the big phenomenon going on right now is Canadian spruce, Western Canadian spruce used to be the big dog on the porch from a volume perspective, and now Southern pine is. There's more of that. Just we don't have to belabor the point, but everybody knows there's more trees available. The production capacity is more. The difficult thing is finding the labor, and it's more. The trees are harder on equipment, but regardless, we're at a point right now where Southern pine is overproducing everything else. And you take the treaters out of it, that market is just flat overproduced. And
it's really the default. So like in OSB, North Central used to be the default where everybody looked as the most production. Now Southeast is, right. Spruce used to be the default everybody looked at. Now, I mean, I could arguably make that Southern pine is really your main market as far as volume now. And it's making its way north more and more, right?
Yeah, and actually it's going all the way to the Great Lakes. It used to just go to about the Mason-Dixon line or Ohio or Indiana. Yeah. It's going all the way to the Great Lakes now, and as far west as Denver and even Arizona.
Yeah, but, so somebody really needs to come up with, and we can do it on like a materials exchange on the physical market, but the market's really craving a real mechanism to price that relative to what we currently have. U.S. species, interesting, less, they're kind of setting their production schedule. I know what we've been talking about here for a month has finally come true. Home centers are pushing back on their studs, and the world is awash in 96-inch studs right now. That'll change eventually, but people need to move that. OSB, interesting. Certain people on contract are buying at contract prices. We had a ton of OSB trade on the platform in the last week. 23.30 seconds, 7.16, all over the place, making moves everywhere. A lot of stuff went from the Northeast down to Texas, Southeast to Texas, Southeast to Oklahoma, all over the place, right? But it's kind of cool to see those spreads. Northern board held a little bit of a premium for a while. That premium's starting to shrink. Prompt wood is still bringing a premium, but there's a big divergence between what people are paying on contract versus what they're selling on spot, although that's starting to come in right now, I've noticed.
Yeah. I think it's just a sign of liquidity in the market. We're getting some fluid liquidity in the market.
Well, it's also, it makes absolute common sense, because when you only have 5 big producers, it takes more of a while to work that stuff and the information through the chain. It eventually happens, but it's just the way it is. It's like the airlines. Euro is still coming in. I mean, we talked yesterday a little bit about, gosh, if I'm a European producer sitting over in Europe, I would certainly want to be listening to one of these shows to find out what the brokers are going to come back to me or my people to how they're going to price that euro, right? Because there's wood on the water and wood being produced that the European guys probably
less when it gets there.
European guys probably want index, and the buyers probably want to pay what they just sold at, which is significantly below index. So that's going to be interesting coming across. So let's pull up your framing package index real quick, which people love looking at that. What do you got to say about this week, Matt?
Here's what's interesting. Last month we had a $10,000 increase in the framing package index. It was the largest ever, and it was like just a spike up. And we've given back almost that whole $10,000 in the first 2 weeks of. We'll give it back in the first 3 weeks of this month, but more than likely that framing package index is going to be down more than $10,000 in June. And again, I want to reiterate that those are prices that are being paid at the mill today. So if you're a builder, you can be. I got a conference call with a guy tomorrow. Said he wants me to explain to his sales staff for his own company why they're not being able to sell their homes for less because lumber futures are down so much. Mm-hmm. We were talking about 6 months to build a house versus a market where the prices are going up and down $100 a day every day. So it's volatile.
It's interesting. I was going back and forth on an email on the train this morning on the way in with a big multifamily person. I'm like, where do you think 9-foot studs are? And this chain had like 30 people. And I'm like, do you know that high trade was 12, low trade $6 a piece? What are you getting any of that information, right? People are just trying to learn the information right now. Real quick, we were talking about brokers and all that out here. they're some of our best users on the platform right now in some cases, right? Because they're the ones right now, and they have been in the chain that see all the information, right?
Yeah.
And we love having them on because they create liquidity. And I did it. That's how I made a living for years. So it's a great deal, and we like having them on here. So as we bring this up, I think in a volatile market, it's hard to really, it's a coin flip sometimes. And that's just the definition of volatility. But you got to be smart. You got to pick your points. I think we're getting back into an area where there's actual value in pricing right now, right? Compared to what may be sold. If something is sold and you can buy at a profit right now and it's decent and you're happy, I mean, I don't know what to tell you, but I think people have to have a game plan. So my question is, what are people doing right now as buyers and as sellers? What should their game plan be going forward here in this volatile market, knowing that we've just come off the edge of a cliff right now, but eventually we're going to start catching?
Well, I think there's the obvious thing that's going on is as urgent as the market was for lumber 3 weeks ago. It's like right now everybody says, let's just be on hold and do nothing for another 2 weeks, and then we'll come and buy it. But these prices that you're seeing now don't mean a thing unless you buy them. You know, you have to put that, like the guy that said he was offsides $300 on his 1 4 5/8. He may be offsides $300 right now, but he's probably $500 ahead of where he was before he bought it.
Yeah,
so,
for sure.
So that lumber's coming in. He's been able to average his cost down. So my advice to him would be like, buy it $300 lower. You know, now you've got some of it's $800 under where it was. But if people don't participate in this thing and average this cost down, there's going to be just a stampede of folks trying to get in when somebody finally says, yes, $800 is the number. I'll take all I can get, and it's going to turn. It will turn, because we saw on the way up a lot of multifamily, particularly, that just took to the sidelines when lumber was $1,000. They said it just doesn't pencil out anymore. Next thing you know, there's new projects that are penciling out at $1,200, at $1,500. So these guys sat back there and did nothing and watched these other companies come and do their projects at higher numbers and get going, and now they're behind. So there's a lot of business that's on the sidelines. It's bid at $1,500, bid at $1,200, and those on the sidelines at $1,000. It's all now in the money. And I think we can see a huge wave of multifamily business in the third and fourth quarter just come to the market that needs to get bought.
So I got a question. So how, builders historically were doing 90-day or big yards were doing 90-day locks. They came into 30 days, right? How are the buyers gonna participate in this? So for instance, I saw a couple in Texas. It was a national news story. Got a thing in the mail that their builder on a $350,000 house that they had already signed a contract on came in and said, sorry, because of commodity prices and lumber, your package is now $98,000 more, right? That's the stories you hear at tops of markets, right?
Right.
Well, so how are these prices now filtering back? So if we're trading off of that are these big pro yards getting calls from when they hear about this and saying, hey, look at what are my next 30 days pricing now? Because these yards have high price inventory in them.
And they're not going to sell at a replacement cost. They're going to sell at what their average inventory cost is. Just like on the way up, nobody probably got a framing package. I've heard of odd cases where it did happen, but for the most part, people sell on their average cost plus some kind of adder or subtractor based on what their future purchases are going to be. But it's only going to be like 2 weeks worth of purchases, so it's not going to really be a big effect. Like, say, well, I'm not going to raise. I heard truss manufacturers, for example, that didn't raise prices for 6 months the whole time this market was rising because they had bought well ahead and they had plenty of lumber and their prices weren't going up. But then all of a sudden, when they had to buy again, they were having to pass on 30%, 40% price increases.
And that makes sense since these buyers need the service and they really need people to deliver to a job site. So yeah, that makes absolute sense. That makes absolute sense.
I think you could expect about a 2-month delay between what you see, like you see futures prices going from $1,700 to $980. Well, that's in like a 2-week time frame. So 2 weeks from now, it could be back to $1,700 again. So all you're going to see across your spectrum is just a little dip where your buyer's got a chance to buy a little bit at a lower price and lower your average price. But it doesn't mean you're going to all of a sudden see all of your lumber be at $1,000 FOB
Yeah, and with the consolidation we've had over the last 5 years, people in different geographic regions just have less options to go buy stuff from. Right.
They can't shop it all day long
unless they're big enough to go buy bulk themselves. So one interesting thing, we answered a lot of questions yesterday. Our CEO Mike Wisniewski was quoted in the Wall Street Journal 2 days ago about the shadow inventory out there, and people want to know what that meant. What we have been seeing is a lot of people that are historical buyers and always been historical buyers wanting to get on the sell side on our platform and actually listing and selling things. And I've actually had conversations with people that are not traditional buyers that are building sheds and going into warehouse facilities to start, buying their own lumber in bulk and direct. Have you heard any of that stuff?
Yeah, and you got to put that into perspective too. For somebody that's never done that before to say, I'm buying in bulk. I usually buy 2 or 3 bundles of OSB. I bought a whole truckload and put it in my barn.
Yeah, it all depends what price you bought it at, right?
Well, but the other thing is somebody that says they're buying in bulk that's never bought in bulk before. What does bulk to them mean? Does it mean
True.
500 cars, or does it mean 1 truckload or half a truckload? And I think that the shadow inventory is being way overblown because the people that want to get out of their projects, their bulk lumber purchases, is so little bit of lumber that the market could absorb it in a heartbeat.
Yeah, for sure. So it's an interesting thing to talk about, and I've heard that kicked around. But one thing I've known from the history of the work I've done, supply versus demand, it's not a real big amount of lumber when people take demand off or add consumption that move the price around.
That's right.
And honestly, I've done some work on it where it's really 1 or 2 big mills shut sometimes that can tip a species versus the way it's bought and consumed and in a pipeline. If there's just a small disruption, sometimes it can really create that butterfly effect.
Yeah, and if you think about this too from a finished perspective, if the market's selling 103% of production, it's going to get an order file and prices are going to go up. If it's only selling 97% of production, it's not selling production. Prices are going to be weak and prices are going to go down. So it doesn't have to be 120% of production or 80% of production. All it has to be is just a few points above or below what the production is to move the market in that direction. And I can tell you with assurance, this market's not trading at a volume that justifies a $700 sell-off. There's not. Yeah,
well, it's tough to tell, right? Because that's
not that kind of buildup. I mean, there's not that much excess inventory to justify a $700 sell-off.
Yeah, and nobody thought we'd have a $700 sell-off. That's why we had it, right, Matt?
Yeah, and they all think they're gonna get 500 too, and nobody's gonna get it.
Well, I'm still hearing everybody talking about a bounce, which always concerns me, right? Because the market never does what everybody thinks it's going to happen. The market always does what hurts the most amount of the people the most. And I don't know what that is right now, if that's going up or going down. But maybe it's just more increased volatility, because that hurts everybody, because that creates confusion and uncertainty, right? But well, cool. I think we've hit our half an hour. I wanted to Layman's Lumber Guide. You can get a hold of Matt. Matt, what's the best way to get a hold of you?
Just go to the website, laymansguide.info. There's a subscriber page that I'll give you a free trial to. I did have it on hold for a couple of weeks, but I've opened it back up now. And just laymansguide.info and just kind of plunder around there. You'll find me, or phone numbers everywhere and emails everywhere.
Cool. Well, and Materials Exchange, like I said, materialsexchange.com or mxlumber.com. If you want to come on today, one little gem is there's people listing a bunch of plywood, 3/4 inch sturdy floor, 23-30 seconds OSB, TNG, 7/16, 4x8, 4x9, and 4x10 all over the place. So you can get on our platform and buy and sell OSB today in a market that everybody says is tight. If you don't think that there's OSB out there, you can come to materialsexchange.com, and we've got plenty of it. So thank you very much for showing up for the Lunch with Lumbermen today. We know your time's valuable. And stick around for next week when Matt and I go into episode 11. And who knows what we'll talk about with the volatility in the market. It's a coin flip from here. So great talking to everybody. Thank you.
Thank you guys for coming.
Yep.